This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and hopefully watching the Financial Survival Network. I'm Kerry Lutz. Today is 1/28/2021. And, well, economy, we just keep getting close to 1 million jobs lost per week, but yet somehow we're in recovery mode. Man, this is amazing. Real estate is going off the shelves like you can't believe it at a rate, even in states that are not doing well. Meantime, there's millions of people who can't make their mortgage payments. How does that work? And then the stock market, it's all about the GameStop. What's going to stop the game from continuing in the stock market? Well, our good friend Lobo Tiggre of indefinitely is with us now to opine. Your opinion, very valuable to me, to us, and I'd love to hear from you. Send us an email to kl@kerrylutz.com. Lobo, it's been a while since we had you on. The pandemic, I don't know what to think about it. It's still the leading and perhaps only news item to the exclusion of everything else, except that housing is doing great and the stock market keeps going higher and higher. What is your take here? Like, we getting towards the end here of the stock market bull market, or can they keep it going another couple of years?
Oh, well, it's interesting that you frame it in terms of the pandemic, and that maybe is a good place to start because we do have these new variants. And I'm not a doctor, I'm not an epidemiologist. I don't want to, get in out of my weight here, get in over my weight. But there are new variants. They do appear to be more contagious. And just from the get-go, the issue with this thing, even if you say, okay, it's no worse than the flu, right? The flu kills people, this kills people. It's very contagious, and it's contagious pre-symptomatic. That's been the key since the beginning, and that's why it's been spreading so much. So whatever other facts are in dispute, I think those are pretty well understood, and that matters. And again, I'm not a doctor, and I'm not going to predict the medical outcome here, but as a speculator, as an investor, as an unofficial economist, I'm looking at the markets in our response to this. So what does seem to me to be very predictable is the government response. So if you've got a new variant, right, that's more contagious and it starts spreading again, we could see, a massive return to lockdowns. We've got California just coming off lockdown. They could do an about face just like that if suddenly the new variant scares everybody there. So again, whatever the medical facts are, the sort of social and governmental facts are that we could see, a renewed wave of shutdown. They've been doing it in Europe. That could happen here. And, whether that happens or not is a big variable. So it's a little early to say what will happen in 2021 when we don't know what's going to happen right now with this. So my quick answer is, if the US sees a major outbreak of new variants, then I think, the fat's in the fire. We could see another March 2020 type response. And that would be pretty scary, and a lot of things, if not, then you've got the easy money, you've got Biden's trillions, right? You've got the reflationary trade. So massive difference in outcomes depending on, the very near term.
Mm-hmm. And that's interesting. Well, the one thing we do know now is that the federal government has very little control over what the individual states do. So if you're into the 10th Amendment, COVID has been like an amazing time because the state can do whatever the heck it wants. And pretty much the feds can say you should do this, you should do that, but it doesn't matter. And that's witnessed by the fact that we've got lockdowns or had lockdowns up until recently in a number of blue states. And the citizens were rebelling right and left because they were basically being deprived of a livelihood. And to me, this is like really a Fifth Amendment issue, which says no private property shall be taken for public purpose without just compensation. Basically, they've taken your business and given you nothing, like PPP, baby, and that might have helped a few million businesses, but so many of you out there are literally out of business, out of work because of government dictates, but state government dictates. So in Florida, our governor ended it, I guess, in May. And then in the summer, he said every business opens, and he allowed certain counties, like the one I'm in, to make certain social distancing regulations, but that's it. And he said, and obviously politicians can change their minds. We see it often, but he said no more lockdowns. And so thus far, he's been true to his word. And when you compare Florida to California, California's rate is no lower after all their lockdowns. So you have to wonder if they're going to try to pull the lockdowns again. Can't we get some medical science that proves that these things actually work?
Yeah, I don't know the answer to that, Kerry. That's out of my paws. But I will tell you, the good news is it's not really good news, and the bad news is good news sense. But here's the thing: if we get another wave of panic or facts that cause more lockdowns, that will be bad. That will cause harm. There will be more government response. There will be more easy money of various sorts in response. But even if that doesn't happen, we're still getting more easy money. So it's really, as an investor, as a speculator, I'm looking at this and I'm looking at more easy money or a lot more easy money. There's no less easy money option on the table. So all of this, sorry, it's not that I don't care about the human cost. I do a great deal. I know people have had COVID. You've had COVID. I'm not dismissing the human cost, but that's not what we're here for. That's not my job. My job is to look at financial trends, investable financial trends. And I look at more easy money, a lot more easy money, and they're very clear consequences. That's extremely bullish for commodities writ large, anything real, actually. And I think it's particularly strong despite the, ironically bearish sentiment most recently in the gold and silver market. I think it's extremely bullish for monetary metals.
Hey, so, and even non-monetary, because I would argue I don't see this great economic recovery taking place. And yet, when we look at copper, it's getting close to $4 a pound. We haven't seen that in a while.
Well, and nickel over $8 a pound.
Yeah, nickel.
That's a cyclical high. But that's a really interesting point, Kerry, too, because what that actually tells me is that this is inflationary. This is being driven by inflation. It's not being driven by this massive surge in industrial output, because we don't see that. And in fact, to the degree, as I understand it, I'm not a global macroeconomist and I don't have this data, but from reading and looking at the sources, and as I understand it, you're seeing a concentrated surge in Asia, which makes the global averages look better, but it's not a global recovery. And even in the United States, as you're pointing out, right, you've got real estate, you've got stocks, you've got this so-called K recovery, right? Certain assets are doing great, other things are doing terrible. The average Joe is getting ground in between. So, that's not a case for higher demand, industrial demand for commodities. But if the money printing is visible on the wall, it certainly is the kind of thing that can drive prices higher on the inflation argument. So I actually see this as signs of early inflation. And by the way, just in terms of a so what here, there is a cautionary note, because if the commodities writ large have got ahead of the actual industrial use, pushing them up, then they can easily correct, especially if there is another lockdown, shutdowns, there's more panic. Then copper and nickel and all, oil also I'll come right back down again for a while. But at the end of the day, I think the data is telling us that inflation is pushing, anything real upwards. And we're seeing that in these commodities.
Yeah, totally true. I mean, that's kind of my take on it here, Lobo, is that we're getting commodity price inflation, whether we like it or not, and we're seeing it happen right before our very eyes, and yet we're like totally in denial over it.
Well, it's a funny thing that there are a lot of these people that are making these deflationary arguments, and I understand. Well, one, you're trained that way in school, right? You have an economic recession, let alone a depression, that people can't spend as much, and so that's deflationary. But we know from history that you can have stagflation. That is a real thing. It happens where you have economic stagnation and inflation at the same time, because at the end of the day, the printing press is a very powerful tool. But here's the most recent data point is, okay, you've got 2020, massive shutdowns, huge destruction of incomes and industries, entire sectors of the economy put on hold. And we didn't really see any deflation. We saw, some prices, airfares come down a bit here and there, some very localized deflation. But CPI itself remained positive. And, CPI is the most government-friendly number there is. Real inflation went crazy. And of course, financial asset inflation really took off.
Yeah, and that's what we really need to look at, is that the fact is real estate and stocks, that's where all that money's going somehow. And, you look at the Robin Hood traders here, right? They're kind of the tail really wagging the dog, right?
It's as a gold bug who corresponds with thousands of readers, right? Not simultaneously, of course, but I hear from lots and lots of people out there. And there have been a lot of people who've been very upset with the short and distort crowd, especially in the junior mining stocks. It seems so easy to go short, put out some so-called research report that slams some company, and then even if it turns out that nothing in that report was true, is all nonsense, well, the shorts have already made their money and gone off. So there's a lot of animosity towards shorting in the market, even though I believe, on a theoretical basis, that shorting is a form of self-regulation of the market. There's a legitimate role for people who think that companies are bullshitting and calling bullshit on management. I think that's a good thing. But in our space, there's a lot of people who just hate shorters. And so here you have the Robinhood crowd and the Reddit crowd taking on the institutional shorts and crowdsourcing this. And it's really kind of people power versus the machine. And so there's actually kind of a cool aspect to this of, it's interesting. It's interesting. I can't say that I would shed a tear to see some of these institutional shorts forced to really eat their shorts.
Well, we saw it today with GameStop. There's an outfit called Melvin Capital. All right, they were like all in on the GameStop short. And they just happened to decide a couple of days ago, maybe it's time to reallocate their capital. They received a bailout from the mother of all shorts, Citadel Capital, and from Stephen A. Cohn, who's I thought was retired, was forcibly removed from the security and hedge fund business, but evidently, I guess his family office doesn't count. So they bailed out this hedge fund, I think, for a couple of $2-3 billion, and that's just one. Can you imagine? You have the perfect short of all times. You got a failing business where they're closing up retail. All of their edge is taken over by online competitors, and yet the stock goes from like $12 to close to $400 in a matter of a week, and it just wipes out the perma shorts, because the perma shorts, it's not like they care about the market or anything else. It's just a business model that has been extremely effective in a multitude of industries, not the least of which is junior mining, for many, many years. And all of a sudden, it's like finding out there is no tooth fairy or there's no Santa Claus, and then having them come and repo the office furniture and basically shut you down.
Sure. No, it is an interesting time, and it's the sort of thing, there's got to be a regulatory response at some point. It's never happened before, right? This was before social media. You couldn't organize enough little guys to go after the big guys in this way. So it's a new thing in the marketplace. But I got to say, on one hand, it kind of, it's certainly intellectually interesting, and it kind of excites me to see the little Davids versus the Goliath. But I worry too. I mean, that's fine for the people who got in early and they benefited. But what about the people who are buying now? I mean, and somebody's going to get hurt here. And
greater fool theory is well at work, isn't it?
yeah. So
you just don't want to be the greater fool. You want to be the early fool. You don't want to be the later greater fool. But yeah, to see these guys get payback, I don't have any love for them, and they probably had it coming for a long time, because the one thing that Wall Street hates more than anything in theory is the guaranteed payoff. And yet their biggest participants are the beneficiary of the guaranteed payoff, till every now and then that things blow up and then they need a taxpayer funded bailout. But otherwise, the way it normally works is the house always wins, and the house is Wall Street. So to see a couple of guys take hits from this, not such a bad thing. But what will they do to make that stock go down, Lobo? What can they do to really bring that stock down?
Maybe they don't need to. I mean, if it's been driven up by a frenzy, at some point, the buying goes away. And then what do you do when there's not more buying than there is selling? And at some point, the people who have big wins have to decide to take some profits. So, it could just be, an idea that the time comes. But actually, the bigger picture, as interesting as this is, the bigger picture is, I think, Wall Street is broken. This is just a sign of it. Right? I mean, I'm not saying anything that's surprising to anybody. It's so disconnected from Main Street. That can't be right. That can't be sustainable. Now, more easy money, just because it's crazy, just because it's insane, it doesn't mean it can't get more crazy, more insane.
Yeah.
Right. As the old saying goes, the market can remain irrational longer than you can remain solvent. Right. We've seen that so many times. But that doesn't mean that it is sane. That doesn't mean that it's okay. That doesn't mean it's going to end well. And I think, there's also the record numbers of options. And as I understand the numbers, it's largely call options. Like the options trading out there is so overwhelmingly optimistic. In any trade, there has to be a short for the long. If everybody is just completely skewed towards the bull side, how does that end well? At some point, reality matters, and it. I think all the way down here in Puerto Rico, I'll hear the explosion on Wall Street when it comes.
And it's going to come. Just a question of when. It could go on quite a while. We have no way of knowing when the feeding frenzy ends. And they're, like you said, talking more stimulus, more money going out the door. And hey, another $1,400 stimulus check. We know that there's a certain percentage of the population that is going to put that into their Robinhood accounts, and it will further feed the frenzy. So I guess maybe the stimulus is kind of the key. At some point, they're going to have to stop the stimulus, aren't they?
One would think at some point, and it's funny, you look at some of these MMT arguments, and they say, oh, money printing doesn't matter. We can print all we want. Reserve currency means that we can print all we want. We just export all our new dollars. So the inflation, that hurts those other little brown people in some other country. It's not our problem. No, the MMTers don't say that. But
they think it.
But the excuse, right, or the apparent history saying that we can print all we want. The U.S. is special. We can print all we want. It doesn't matter to us. It's just not true. Like if you say, okay, well, why don't we send everybody $1 million check? I mean, it sounds like reductio ad absurdum, like that would never happen. I get that it would never happen. But if you're saying that money printing doesn't matter, if that's true, then why not send everybody $1 million check? It doesn't matter. So clearly at some point, the money printing does matter. And the question isn't, does it matter, does it not? It's how close to that, at what point does it matter for the US? And I've actually written a fair amount about this, the Fed playing with hyperinflationary fire and so on. I'm not predicting hyperinflation this year. But what I am saying is that for the very reason that the US has been able, as reserve currency, the world, status holder, has been able to export all this inflation. If you hit that tipping point where the Fed seems to lose control, that you could see a massive reversal. And so it could seem like, okay, we just have inflation, or okay, we have higher inflation, everything's fine, everything's under control. We have a symmetrical target now, so it's perfectly fine. These are not the droids you're looking for. Pay no attention to the man behind the curtain. It's all good. But if that tipping point gets reached and those dollars start coming home, that reversal can be so massive in its impact that you could actually see a hyperinflationary response at some point. But you know what? The good news is that gold bugs don't have to have hyperinflation to do well. As I said before, we're looking at easy money or more easy money. Don't need hyperinflation. High inflation is good enough. The one thing I think to really keep on mind, if we can add value for your audience out here, Kerry, is that we just saw gold get smacked around by a spike in rates, right? And we know that real rates have a strong impact on gold prices. So if there's a concern about the very inflationary pressures, it's kind of weird. It's become a thing now amongst financial types that inflation is going to be bad for gold, because inflation is going to drive up rates and rates are bad for gold. And what's getting left out of this is, okay, if inflation drives up rates, how much inflation versus how much nominal rates? If the inflation goes up more than the rates go up, you still actually have increasing negative real rates, which is good for gold. And people are forgetting that. They also seem to be conveniently ignoring the fact that the Fed has said we're not letting rates go up, not till 2023 or something like that. So this idea that somehow, rates are going up and that's gonna be bad for gold, I just think it's completely inconsistent with the facts in front of us. But of course, paper traders in New York and London, they're happy to ignore the facts and just go with their knee-jerk responses, it seems. But I'm talking too long. I should let you get your next question. I just want to point this out, though, because I think it's important for gold bugs out there. There is right now, as you and I speak, the sort of knee-jerk thing going on. There's a fear, there's a negativity, I feel, in the gold space about rates and what's happened in recent price actions. I do see that as an opportunity. I don't see how the more easy money that's baked in the cake is anything but good for monetary metals.
Yeah, and the debt monetization, which is all part of that, the deficits, multi-trillion-dollar deficits, as far as the eye can see. Certainly, we don't have any even fake concern or false concern about inflation or money printing and the long-term viability of the currency and the effects that this has. So nothing will happen until there's another disaster, another crisis. But when the next one hits, you have to wonder, is this the big one? Reminds me of that TV show Sanford and Son, where Red Fox used to say, "Oh, this is the big one. This is the big one. I'm coming to join you," telling his wife, "I'm coming to join you." And, he was faking it all the time. Nobody believed him. Here, they don't even consider the possibility. Where we're going to wind up, that's the best question. If you had to take a stab at where you think precious metals prices will be by the end of the year, Lobo, where do you think?
Well, Lobo means wolf in Spanish. So I should perhaps point out that in the story of the little boy who cried wolf, at the end of the story, there actually is a wolf, and the sheep do get eaten, right? You can't be a shepherd out there on the edge of the forest and decide that there are no wolves, no inflationary wolves, no blow-up wolves. They do exist. But you know what? On the other hand, I remember how sure we were after the crash of 2008 that was the big one. And I remember talking with Doug, and I love Doug. I'm not throwing him under the bus, but I remember, talking about this with him and saying, "Doug, could we be wrong? Is there any way we could be wrong? Like, this looks like it, It had, massive crash, unprecedented government responses. This got to be it." And we agreed that this was it. Gold was. And then 2011 happens. It goes into reverse. Somehow they did kick the can down the road. So I can't say that this is it or that I know this is it. And frankly, I wouldn't believe anybody who says they do know that.
Yeah.
But what was unprecedented in 2008 is peanuts compared to what's being done now. So whether they lose control or not, the monetary implications are clear to me, and that's good enough for me.
Yeah.
Now, do they lose control? They could. I don't know. I mean, even if there is another big wave of COVID shutdowns, that could give just a real kick on a rickety house of cards. Who knows? I mean, we could be talking, 6 months from now about the big one happening. That card is in the deck. I just can't tell you that it's the next one to be turned up.
Yeah, agreed. We agree there. The one thing I've learned is you don't know what the future is going to be, no matter how compelling the case might be for a particular outcome until it actually happens. You just have to go with it. You could bet on it. You can invest in it, but until it actually happens, the gains are not locked in, the profit's not there, and we just have to look at the past 10 years, 9 years for precious metals, and we know that that's the case. Hey, just we got to go now, but indefinitelyspeculator.com, that's Lobo's publication. Just tell us what we find there and how to sign up.
Sure, thanks for that. So yes, at indefinitelyspeculator.com, there is a free weekly letter that everybody can sign up for. It's called the Speculator's Digest. And I promise we do not spam you. If you sign up for that, you get 1 email per week. Well, I just put out 2 this week because I had made a correction, but you get 1 email per week, not a flood of spam of daily advertisements. We won't do that to you. And there are also some free special reports. There's a special reports tab there relevant to what we're talking about. There's something I call the upside maximizer, which is a strategy for not letting these big wins slip through your fingers. It's a free download. Anybody can look for that upside maximizer. There's other free resources there. Of course, I do hope people will do business with me in my paid services going forward. But I do see myself as an educator. And there's a lot of free material available there, and I encourage everybody to make use of it, and I hope it does them good.
Yeah, I think I'm on your mailing list. I know I've seen things from you in the past. Make sure that I'm on it. But the one thing I have always enjoyed about your work is the caliber of the writing, the quality of it, the grammar. You don't do split infinitives. Nobody cares about what a split infinitive is anymore, I think, except me, because I used to get yelled at by my teacher whenever I do it. But, good grammar, good writing, good messaging, really can't ask for more than that. So
well, you've just made my day because, nobody really cares about my writing. They just want me to have the right stock picks, right? That's what people want. They want to know that I've got the next 10 bagger or easy, easy double or triple or something. But I'm a writer. And so thank you, Kerry. That really means a lot to me.
Well, good, because it's true. And, I've been reading your stuff for like years, and that's one main thing. And it's rare on the internet these days. So in any event, go subscribe to Lobo's site. Highly recommended. And hey, drop us a line. What do you think about what Lobo said? When is the big one coming? What's your opinion? Email us, kl@kerrylutz.com. And of course, our website, financialsurvivalnetwork.com. Sign up for our free newsletter. Lobo, always a pleasure. Good luck, and we'll see what happens next.
Thank you, and you too.
This is the Financial Survival Network. Now more than ever. The Financial Survival Network.